Hello and welcome to the day ahead. It is Thursday, March 31st. I'm Andrew Gagan. Well, kicking things off on the global stage, both European and US equities lower. The Dow and S&P both snapping a four-day winning streak as Ukraine and Russia peace talks. Optimism faded and investors mulled the outlook for the US economy after the ever so brief inversion of the 2- and 10-year yield curve. On average, it takes around 18 months for a recession to hit, and stocks tend to track higher after such an inversion. Well, the so-called market purists are keeping their eyes trained on the 3- and 10-year gap, which sits at its steepest level since 2017. Energy remains the commodity on watch, with Germany and Austria taking the first step to gas rationing over a potential payment standoff with Russia. This after German Chancellor Olaf Scholz spoke to Russian President Vladimir Putin by phone, reiterating the country would only pay euros for US dollars for any supply from the Kremlin. Natural gas prices, meantime, have spiked around 5%, as those worries over Russia's plan to price energy exports in rubles caused global prices to rise, keeping demand for LNG exports near record highs. Stock specific, Apple shares are under pressure as it faces a €5 billion class action lawsuit in the Netherlands, alleging the tech titan has taken advantage of its monopoly position with the 30% commission it charges app developers. Walmart shares, meantime, jumping on a volume spike, and Bionomics shares halted for volatility. Turning to the pointy end of town, and GDP stateside, a marginal miss on estimates, with the final fourth quarter reading showing 6.9% annual growth versus the 7% analysts were expecting. ADP private sector payrolls bang in line, rising by 455,000 in March. The euro higher against the greenback as Eurozone inflation stokes the rate hike fire, and optimism over peace talks between Ukraine and Russia fade. Germany has joined its global peers, reporting inflation at its highest level in more than 40 years as prices of natural gas and oil soar. Elsewhere, the yen has recovered some ground from its 7-year low that it hit on Monday, while the Australian dollar continues to hold at around 75 US cents. Bitcoin, meantime, is holding on to support at the $46,000 level, attempting to break above 48,000, finding resistance around the 200-day moving average at 48,300, though momentum remains positive. Over the past week, the crypto coin has gained more than 10% against the greenback. So bringing it all back home, and the Australian share market is set to extend its recent gains, with SPI futures currently up just over 0.1%. The local market is up more than 6.5% in the month of March and has remained resilient in the face of heightened volatility, with traders saying the buying at the beginning of the invasion of Ukraine was expected, but the continued level of take-up is a surprise.
When these macro events happen, strange as it feels and worrisome as it is, it's so often the time when the news flow rather than valuation drives prices. It is a good time to buy. What's kept the market going surprises me though, and it really ought to be the baton changing over for a little bit of fear about inflation and rates that shouldn't have allowed, to our way of thinking, the market to have got quite this high right now. So we look, obviously at the gross indices, but when you look at the accumulation index of the market, you're right on all-time highs pretty much, or just under. So, is that fair with the settings we've got? It seems a little bit rich, really, for our way of thinking.
Now, on the commodities front, Brent crude oil rising almost 3% to $113 a barrel. That is ahead of the OPEC Plus meeting later tonight. It comes amid reports the oil cartel, which includes Russia, is likely to stick with its existing deal to gradually increase production despite a surge in prices. Base metal prices climbed, with aluminium up 3.5% on supply concerns and nickel more than 3.5% higher. And gold futures were up 1%, while iron ore was up around 0.5%. ADRs of BHP and Rio up 3.3% and 2.7% respectively. On the data docket, private sector credit, building approvals and job vacancies released here at home, with PMI scheduled in China. A quiet day on the corporate calendar, with Harvey Norman trading ex-dividend. Macquarie is considering the sale of its toll road assets in India, and BHP in focus after Samarco failed to reach an agreement with creditors on a restructuring plan. And finally, a bit of M&A with Brazilian oil company Enuata inking an exclusivity agreement to negotiate the sale of a 50% stake in the Atlanta oil field to ASX-listed Karoon Energy. And that is your day ahead. See you again tomorrow.